Welcome to the Passive Income Podcast. I am your host, Dividend Dave. Please be sure to join the Passive Income Posse by clicking that subscribe button. Super excited for this episode. Joining me is WiseAle2. You can find him on Twitter at WiseAle2, and I highly recommend giving him a follow. Some great quality tweets. WiseAle2, go ahead and give yourself an introduction.
Hi, so I'm Alex. I've been investing since about 2018 or so still kind of relatively new to the game, generally speaking.
Right.
Like most people, I wish I had started earlier. That's the thing, is time in the market is the biggest thing. And when I was a kid, my dad used to always try to get me into investing, and I just wanted nothing to do with it at the time. I was very into sports and fantasy sports, so I was always kind of analyzing player stats, and I wanted to win my fantasy league, and that's what I was worried about. And my dad was always like, if you just put that effort into stocks and stuff, in the future, you're going to thank me. And I wish I had listened, which I didn't at the time. But so now I am a big investor, very heavy into finance. I like books. I like reading. That's, I guess, my gimmick. Everybody has their thing. Mine is books.
Yeah, nice.
I'm very involved in the local library here, and I try to recommend a new book on my Twitter every Monday. So if you're interested in books, check my profile on Mondays.
Yeah, for sure. And before we started recording, everyone knows I'm in Canada, you're in the US, and we determined that you're literally straight across the lake from me.
Yeah,
so
very
you're
close.
Not far away.
Yeah, I could probably see you if I went to the beach.
Well, yeah. Nice. So yeah, let's just get into talking about some of the different things in investing. I guess let's start in 2018. What maybe some of the first companies you invested in, what you liked about them, what you kind of maybe regret now. I don't know, sort of anything. Start at the beginning.
So one of the first companies I kind of got into was a company called Yamana Gold. It was a gold mining stock, and I got interested in that because as I was
it's gold, Jerry, it's gold.
Yeah, it's gold. Yeah, nice Seinfeld reference. I love that. Banyan. But yeah, so I found that because I was very interested in silver and gold, because I initially started kind of collecting that. And that was the way I started into investing a little bit. And then once I was kind of filling up my physical space, I started to branch out into the digital era and thought, well, I like gold. Let me see if there's any good gold mining stocks I could own. I found this Yamana Gold stock. I really liked it. It looked like it was a good company that was doing well. And the price at the time was actually going down. So I kept my eye on it, and when it reached a level that was very low, and I thought there's no way, like, it's not a $2 stock. Right. So I kind of loaded up on it at that time, and I would buy it every week, big purchases with each of my paychecks. I was working in a law office at the time. And then at some point in 2020, I think it was right around either the pandemic or right after it, the stock kind of exploded, and it went from 2 to like 6. And like, that's enough for me. Like, I don't need to hang on to it anymore after that. So I ended up selling out of the stock. And that was one of my first investment tastes. And it was one of my first kind of big wins, I guess.
Yeah, successful investment tastes.
Yeah.
Most beginners are not that. I'm going to use the word lucky, right?
Yeah. No, definitely. I can say that it was definitely lucky, especially looking back on it now, being that it was under $5. So it's technically considered a penny stock,
right?
And those aren't things that I touch at all anymore with a 5-foot pole. I stay away from penny stocks, and I usually don't tell people any advice or what to do with their money, but I always do try to warn people away from penny stocks if I can, because they're very it's a noob trap, for lack of a better word. People think that, well, this company is a good deal because it's only a couple of bucks, so I can get a lot of shares, and if it goes up, I'll make a ton of money. But what they don't kind of take into account is the risk involved is a lot higher too. So the chances of it 10xing or whatever aren't what people expect.
Great, yeah.
Yeah.
Out of curiosity, what is that stock worth today?
So it actually ended up getting bought out by another company. Pan American Silver bought them out earlier this year. So now Yamana doesn't even exist anymore, because I actually wanted to look that up. I wanted to see if I could buy back in. a couple of weeks ago. I was looking it up, and like it was gone. And I'm like, what happened here? So they got bought out by Pan American Silver, and like that stock actually looks a little attractive now because it went way up after they acquired Yamana, and now it's kind of gone back down a little bit to what it was, and now it seems to be creeping back up again. So that may be something I'll look into a bit more.
Do you still have gold and silver or other precious metals in your portfolio?
Oh, I do. I still am a fan. Yes.
Yeah.
There's just something about physically holding wealth, I guess. So that's nice to hold like a gold bar in your hand. It's just a nice feeling.
Yeah, right. Oh wow, that's awesome. So I guess what I'm trying to lead this actually towards copper. And the reason I'm trying to lead it towards copper is EVs, electric vehicles, obviously are becoming bigger and bigger, and we should know by now as investors how much copper, how much lithium needs to be mined and go into every single one of these vehicles.
Yeah.
So I guess, you know, sort of several questions here all wrapped into one is like,
Sure.
you know, kind of thoughts on gold, silver, other precious metals, but specifically bronze or specifically copper with that, you know, play into the EV market.
Yeah, so I do actually own quite a bit of copper as well.
Right.
Back when I was buying gold and silver, I was buying copper as well, and that was by the pound. So normally with silver, it would be a purchase of maybe a couple dozen ounces, something like that. Gold usually would be an ounce or less. And then copper, you can buy by the pound just because of its cheapness in relation to the other two. And I think since then, over the years, it has gone up significantly. It's still relatively cheap, though. I'm not sure what it is currently, maybe $5 or $6 a pound, something like that. Yeah. So, but I think that could be something to look into in the future, especially with the EVs. And one of the reasons I like precious metals is the intrinsic value that they hold, because they're used in things. So like not just jewelry, because
not just gold watches and
that's an obvious one, as people like gold jewelry, silver jewelry, but they have other uses in electronics and various technological things, and that's what gives them their value. That plus the scarcity, and that's one of the reasons I kind of stay away from Bitcoin a little bit and cryptocurrencies a little bit, because people always fight back and forth, the gold bugs versus the cryptocurrency people. And like,
what is the intrinsic value of Bitcoin? And that's the question, and nobody seems to know the answer to that question.
Right.
Does Bitcoin have an intrinsic value? Obviously, gold, silver, copper, all of the precious metals do.
Right.
And it's easily explained.
Whenever you ask that question, a cryptocurrency supporter typically says, well, it's used as a form of payment or something like that, a store of value. I can move Bitcoin from one side of the world to the other at lightning speed without a fee, or so on and so forth.
Yeah.
And like, and that's not like an intrinsic value case, though, is the thing. Because like, if somebody doesn't want that Bitcoin, now you don't have that value.
Right.
Whereas with gold, it's not necessarily somebody wants the gold. It's that it needs to be used in this technology that is needed for whatever reason, like an iPhone. There's precious metals in people's iPhones. And that's why when you have an old cell phone, you can exchange it, even though it's way outdated, because they just melt that down and use the metals in it.
Yeah. It's like you want to go to your junk drawer and find all those old Nokias and Sonys and whatever else you might have in there, right?
Yeah, but always make sure to check your picture gallery first.
Oh man, that's a fun point. So on your Twitter profile too, it does say, you know, more into, maybe not so much more into, but definitely into the dividend investing as well.
Yes. Yep.
And so I guess maybe let's go through a bit of the timeline from 2018. You mentioned 2020 and the beginning of the pandemic.
Yeah.
And so somewhere along the line here, so I don't know where, you tell me, 2018, 2020 dividends, you're like, hey, wow, I like companies to pay me to not work for them.
Yes. So it was actually, right around 2020 during the whole pandemic and everything, when everything started to crash and then
Yeah.
prices were becoming really attractive. I had a lot of cash lying around, in large part because of the amount of gold stock that I was mentioning before.
Yeah.
So that's when I was kind of looking into really building out my portfolio now, because like prices were crashing, and I thought, well, the world's not ending, so things are going to come back eventually. And
Right.
I ended up kind of stumbling across a post that one of my friends on Facebook made, an old college buddy who was into finance, and he posted about some dividend ETFs that he held. And I looked into them and I was like, wow, it actually would be really nice to make 6% on my money by just buying this and letting it sit there forever. And then, like, it's going to go back up. So I also have this growth
Capital
potential.
appreciation as well.
Yep. So that's what kind of triggered my interest in the whole dividend investing angle. And I think what is attractive to me about it is that passive income is like my whole reason for investing. It's my whole reason for working. Eventually, I want to make it so that I just don't have to work. And it's not that
That's
I'm
everyone's
lazy.
goal, right?
Yeah. It's not that I'm lazy or don't want to work. It's just that I want the freedom of my life to decide,
Yeah.
do I
It's
want to
time
do
freedom
this
that
or
we're
do I
all
want to do
striving
that?
for.
Right. I don't want somebody to be able to tell me you have to get up at 6:30, get dressed, take a shower, drive 15 minutes in rush hour traffic to my office, and now sit here for 8 hours and do
Right.
work for me. I want to be able to do what I want to do, not someone else tell me what to do.
15 minutes in
So,
rush hour. Anybody listening out there right now is going, I sit like an hour in rush hour traffic. I'm lucky too. I like my commute is like 8 minutes on a
I
road
think
going into town. So it's like I
I think
have
I go in early enough that I miss most of it.
yeah.
So whenever I go in late, because sometimes I have an appointment or whatever, I go in at like 8:30. I'm stuck there for
Yeah.
30, 45 minutes. So it's like a waste.
Yeah, no, traffic is one of the biggest problems and especially rush hour traffic in the big cities, right?
Yeah.
Like it's mind-boggling to me that people do that. I like I can't comprehend that
Yeah,
people
it's stressful.
live in these big cities. Yeah, it is very stressful, and like I said, I can't comprehend why people would live in in any of these big. And there's so many big cities. Obviously, there's only a few in Canada, but so many big cities in the U.S.
Yeah.
And all of them had like bad rush hour traffic. And it's like
Yeah.
you're doing it to yourself every day. I don't understand.
Yeah. So I'm a country bumpkin. I grew up in a small town. I live in a small town, but then I work in the city. So I hate
Yeah,
that
yeah,
part of it. But
same. No,
yeah,
I
so that's how I got into dividends.
nice. I
And
was just gonna say same. I live in the country, and actually the city I live close to is a very small city of like 50,000 people.
yeah,
So I'm not
yeah,
really affected
Rochester, and I
by
live
that at
near.
all. But
Yeah, that's the way to do it. But yeah, so that's how I got into dividends, because I'm very big on passive income,
right,
and I have some other passive income streams as well. I actually run my own website, which is like an online game that I created
nice.
about 20 years ago now, to be honest.
Oh, like
And
wow.
yeah, so
And it's
I
still
make
generating revenue 20
it's
years later.
still generating revenue, and like I'm
Well,
completely
definitely
hands
send
off
me
at
the
this
link, and
point.
I will put it in the description.
Oh, that'd be great. Yeah. So it's a role playing game online, and I'm totally hands off at this point. I have like a whole staff that run things for me,
Wow,
and then like I just collect passive income from that, and then I add my dividend income onto that, and I work
nice,
in a job where I'll eventually retire with a pension, so
nice.
that'll be nice to have. So I'm
Yeah.
kind of trying to create different streams of passive income for now and the future, so that they'll eventually add up to something that I can
Hold on,
rely
hold
on.
on, hold on, hold on. You said 20 years ago. You look extremely young. Were you like 4 years old when you made this game?
So I am about to turn 37 next month. So I was still in high
17.
school. Yeah,
Oh,
so I was still
wow.
in high school, senior in high school. I was very interested in coding and website design at the time. So I remember coming home from school every day and just working on this site for like
Yeah.
hours and hours. And every summer, I would devote my whole summer to being on my site working on it. And
Wow.
so, yeah, I definitely put in
But
the
great
work on
story
it.
because like 20 years later, you're still reaping the rewards of this game
Yeah.
that you made
Yeah.
You know,
Yeah.
as a
I
teenager
never
in
would
high
have
school.
imagined that either. That's the thing. Like, I thought this might be something people would play a little bit and then kind of die off. But like, I
Right.
think even more than the income it generates for me is just the fact that like I made something people want to play.
Yeah.
That
Still,
blows me
like 20
away.
years later, they're still playing
Yeah.
this game. Wow, that is very impressive. Yeah. Tip of the hat to you
Oh,
on that one.
well,
Wow,
thank you.
that's
Thank you.
great.
I appreciate that.
I I do want to circle back though to that. You said you a Facebook post from an old college buddy and an ETF. Do you remember the ETF? And
Um, the ticker was DIV. I can't remember the name of the ETF though. I want to say Global Super Fund or something like that. It
right,
was just supposed to be like a dividend generator, and like its claim to fame was it had like a 6 to 9% dividend that it generated, and it was like around a $20 a share stock. And then after the pandemic around March, it went down to like $9, something like that. So I figured that it would be a growth potential plus the
hmm
dividend potential there. And then as I held it over time, I think I ended up selling out of it back in 2022 because I was learning more about dividend stocks, more about dividend companies and payout ratios and fees and this and that.
yeah, yield, dividend
Yep.
growth, and all sorts of fun stuff.
Yeah, and this one isn't one that I would actually recommend. The fee is rather high on it.
Right.
The holdings on it aren't the greatest either. There's not a lot of growth to the holdings there, so the share price probably doesn't have a lot of potential anymore. And the dividend was a little bit unstable in that it was getting cuts, repeated cuts, and
Oh, those are never fun. I've been through
yeah,
so many dividend cuts, and I don't like them. I
yeah,
don't like them.
yeah. No, they're not good news. So it was good for what it was at the time. I definitely made money on it, but
Right.
it's not one that I would invest in anymore. I'm definitely more into the ETF side of the dividend thing. I'm very big on SCHD, as many in DivTwit are.
Nice.
Uh,
Yeah.
Realty
I hope you
income.
follow
Oh,
Craig
I do.
S
I do.
at SEHD stand.
Yep.
He's been on here a few times, and he's great. I love. Yeah, Craig's great.
Yeah. No, I love his daily updates on it. So
Yeah.
it's easy to keep up with it just by following him. I don't have to look into things
Yeah.
myself.
Right.
So it saves me a lot of time.
He does the work for you.
Yeah, that's great. And that's one of the big things. I'm very big on value investing. So I'm big on
Right.
investing in things that you believe in and that
Yeah.
you keep track of and that you watch and you're knowledgeable about. Like, don't just invest in something because the share price may go up. I'm
Right.
more of invest in something because the company is solid. And that requires a lot of reading. It requires a lot of analysis of financial statements, income statements, cash flow.
Yeah.
So, like, being able to follow him on Twitter, I can keep up with SCHD without having to devote all that time to SCHD, which is very
Right.
nice. It's very useful. And
Yeah. He devotes the time for you,
yes.
right, and just provides everyone with the information. So that's shout out to you, Craig. Good job.
Yep.
Let's go back to March of 2020 and COVID. I call it the COVID crash of the
Yeah.
stock market, which is honestly one of the weirdest stock market crashes I've ever been. Obviously, I'm older. Everyone knows I'm 50 years old.
Mhm.
So I was young in the Black Monday 1987 or 80. Was it 87 or 88? I think 87. And then obviously the dot-com
Yep.
bubble of
Yep.
the late 90s, early 2000s, the financial crisis of 2008. And those were all sort of you know much more extended uh, downturns in the
Mhm.
market. Again, going back to March of 2020, which again I call the COVID crash, everything dropped for like a week.
Yeah.
Like literally, it was like a week or maybe two, and then the prices just started going back
Yes.
up.
Yep.
So again, like you were right in there, being lucky.
Yeah. Yeah. No, for sure. I definitely was. And I think a lot of it is because I didn't have anything else to do with my time. I was
Right.
deemed an essential worker, so I had to keep going in, but I
Yeah.
didn't have work to do because everything else was shut down. So I was going into the office,
Okay.
but I was just looking at the stocks,
sitting on your computer all day looking at Yahoo Finance or whatever else.
Yep, which I can't do now. So it's very hard to time things, which is almost impossible in a normal market anyway. But
correct.
So I think that's why I was able to get in on such low points, even though it was a brief period, because you're right. Things did start coming back up, even though things weren't open again, which made no sense.
It was like one of the weirdest downturns I've ever seen. Well, definitely the weirdest downturn I've ever seen in all my years of watching the market, right? So
yeah, no, I can definitely agree with that. And like, I feel lucky that I was able to kind of build out my portfolio during that time too, because that's another reason.
Well, no, you did great on that gold stock, and then you had some cash to put into when the market had a downturn. And again, we know you can't time the market, but if you can luck out in timing the market, hats off to you, right?
Right. And luck is a big part of investing. It really is, especially when people get into the trading and swing trading type of investment, as luck starts to play a bigger role. That's why I'm more of a long-term investor. If people follow me on Twitter, they'll know I'm very against day trading.
No, day trading is not for me either. I'm definitely a long-term investor as well. Like dollar cost averaging and hold it until whenever. Like
So my general strategy is kind of like a two-pronged approach, I guess, and it's a sort of a combination between John Bogle's mutual fund investing and then Warren Buffett's value investing.
Right.
So I invest heavily in index funds, whether they be ETFs or mutual funds. And I think that provides a good basis and a good foundation for everybody's portfolio. And I would recommend everybody invest in index funds to some extent.
Yeah.
And in addition to that, I also invest in companies that I believe are undervalued based on, I typically use discount cash flow analysis. And it's on companies that I like or that I believe in or that I know about. And they're companies that I can keep up with and read about. So I try to add my ETFs and my mutual funds to these companies, which are, I think I have about 8 that I currently hold, maybe 9 around there, and then a couple of index funds. And that's my whole portfolio.
So 8 or 9 individual companies.
Yes. Yeah.
So what's the top one out of those individual companies?
I think the top one right now is Realty Income. I think that's
another fan favorite.
Yeah. So, and then of course I have Coke. I have Ares Capital, which is one that I like. It's a financial company, and that's a good dividend payer too. Arbor Realty is another REIT that I like and I own. That one I've been a little bit on the fence over just because it's gone up significantly over the last couple months now, and I'm just not sure if it can hold the price or continue to grow. So I'm kind of keeping my eye on it.
Right. Yeah, interesting. A couple of great points there. So the majority of my viewers and listeners know that I do not hold any U.S. stocks at this moment, and that's primarily because of the exchange rate. I just can't justify losing on the exchange rate of like 70 cents on the dollar, basically. Maybe 73 cents on the dollar, whatever. But the 3 that you mentioned are like basically 1, 2, and 3 on my watch list for U.S. stocks. Number 1 being SCHD, and then I guess probably tied for 2 and 3 are Realty Income and Coca-Cola.
Okay,
so, like just basically, amazing. Well, the one SCHD, amazing fund, and then the other 2 amazing companies. So eventually, someday, the Canadian dollar will go back up against the U.S. dollar, and I'll be able to pull the trigger on those ones someday. Maybe. Who knows? We'll see.
I hope so too, because I have a lot of Canadian currency still from my trips over before the pandemic. I don't know. I haven't been since the pandemic. I don't know if it's.
Yeah, you're close enough to the border, and that you have Canadian currency. You actually would know what, like, if I said loonie and toonie, you actually know what that means.
Oh yeah, yes I do. Yeah, I love the toonies. When I was a kid, I always tried to poke the middle piece out.
Every Canadian has done that. We've all done it. Every single person. If anybody says they hasn't tried to do that, they are lying to you.
Yeah.
Awesome. Yeah, no. So yeah, it's basically just the currency exchange on that. But definitely high on my watch list. Someday maybe I'll pull the trigger.
Yeah.
Um, who knows? Speaking, I guess, of Canada and Canadian currency, do you have any, I guess probably not any Canadian companies if you only have nine in your
No,
portfolio.
no Canadian companies. No.
Would you look at any like the Canadian banks? I'm sure you see a lot of tweets about Canadian banks and how strong they are, and obviously there's a few other. The Canadian telecoms are quite strong as well. So,
Yeah, no,
have you looked into any of them?
yeah, definitely. I'm not saying that I wouldn't ever invest in a Canadian company, and that's one thing I'm trying to actually work on in my portfolio is kind of branching out into international stocks a bit more. Right now, my
Right.
only international exposure is in VT, I believe, is like 30% international companies. And I hold that in one of my retirement accounts from a previous job. So
Right.
I really don't have much international exposure in my portfolio. So that's something that in the future I definitely want to
Yeah.
remedy. So maybe looking into some Canadian banks is going to be on my radar now.
Right. Well, and honestly, that's how I justify having some international exposure is by holding some of the Canadian banks because I know that like TD has a very strong presence. Both TD and RBC have a very strong presence in the U.S.
Mhm.
Uh, Bank of Nova Scotia, has a strong presence in Latin America, and I believe maybe South America as well.
Okay.
So obviously, it would take all day to go through the financials of these
Sure,
big
sure.
banks to
Yeah,
figure out every single thing, every single little pie they have their fingers into. But
sure.
um, so yeah, that's sort of my limited international exposure as well right now.
Mhm.
But I think either way, whether you're Canadian or American, you can do quite well just investing in Canada. Obviously, in the U.S., you can do very well because you have
Right.
the huge companies, your Apples, your Microsofts, your Coca-Colas, McDonald's, Walmart's, Costco's, like Home Depot's, the list just goes on and on and
Mhm.
on and on.
Mhm.
But yeah, you can do quite well in Canada as well. And of course, I've had several guests on the Passive Income podcast here from the UK who have done quite well holding UK stocks as
All
well.
right.
So
Yeah.
so yeah, there's opportunity no matter what country you live in.
Yeah, no, I definitely agree with that. And like I said, it's something that I'm going to work on in the future on when I build out my portfolio because I'm always kind of working on different areas. I like to focus on one area of my portfolio at a time. So I'll really try to target a specific company or a
Yeah,
specific ETF and build up that position.
yeah,
What rather than kind of putting a couple $100 into a few different things, I might put a couple $1,000 into one thing over time and
right.
build that up until I'm happy with the level there.
Yeah, I'm doing the exact same thing right now. This year, I'm focusing on Bell Canada, which is basically the number one telecom provider in Canada.
Right.
So I've been dollar cost averaging into Bell since late December, early January, and then same Bank of Nova Scotia. I've been DCAing into that,
Yep.
and so those are the two I've been focused on primarily this year, and then just sort of dribbling some, you know, buying a few shares here and there of some other companies, but not really adding any more positions to my portfolio.
Right.
Just like,
Right.
okay, well, after I've bought my Bell and my Bank of Nova Scotia, if I have $10 left over and I've got another company that costs $10, I'll just buy another share of that
Mhm.
to add to that position, right?
Yeah.
So, and it's working great because like every month, every quarter, my dividends just keep going up, and that's what we want, right?
Right. Yeah. Yeah. That is the ultimate goal. And I use one of the dividend tracking websites online, which helps me kind of track my month by month dividends of what to expect each month. And it also
Right.
has a feature on there which shows based on the growth rate of your dividend holdings, what you can expect 5, 10, 20 years out
Oh
those
wow.
payments to be. And that's kind of nice to see, even though I'm not sure how much I would rely on the accuracy of that,
Yeah.
but
Right.
it's nice to know that in 20 years I'm on track because
Yeah.
that's kind of the goal is just to make sure that you're on track. And one of the things that I preach all the time on my Twitter is a balance between kind of sacrificing now and working now for the future versus just focusing on the future. because it's all about kind of that work-life balance, that investing life balance. So you don't want to just sacrifice everything now for living in the future, because that's the goal, right? Is that you ultimately you want to have a life in the future. You want to retire, sit on a beach, or go travel. Everybody always says. So you're kind of sacrificing time now for time in the future. But if you don't live
at
now,
the same time, you still enjoy life now a little bit too, right? Like you want to go to movies sometime,
right? Because then
you want to do whatever.
Yeah, like otherwise it just defeats the purpose of trading the time now for later. When because I'll say it for what it is, like tomorrow is never guaranteed either. I could walk out the door today and get hit by a bus and all my investment plans were for naught. But that doesn't mean like I shouldn't invest at all either, just because I might die tomorrow. Why bother? Because then, well, what if I don't? And then
what if I don't? What if I don't get hit by a bus
sitting
and
around
live for
with no
30
money.
more years or 40 or whatever, right? Yeah.
Right. So it's important to plan for that for sure. But it's also important to enjoy life now, make memories now, and not just give everything up for.
Yeah, you definitely have to find that, like you called it, the investing / life balance, right? Like everybody talks about work-life balance, but that's a great point of the investing / life balance of, hey, it's great if you're putting $250, $500 out of every paycheck, but what are you giving up out of that to? And does your life suddenly like suck because you're giving up? Now you can't take your girlfriend to the movies, or you can't sit on a patio with your friends for an afternoon. Like, and I'm not saying sit on a patio with your friends every single day all summer, but like, once or twice a summer, that's a nice thing to do, right? Or
and you mentioned the movies. I'm a huge movie buff. I go maybe once or twice every week. I have one of those memberships to my local theater.
Wow.
And I also have a embarrassingly large DVD collection. So so that's one of my passions too, is movies for sure.
Interesting.
I'm gonna go see Oppenheimer this weekend.
Yeah, I've heard that's the big one for this summer, and that seems to be the one everybody wants to see.
Yeah.
Interesting. So beyond, so we talked about SEHD, Realty Income, again, fan favorite on Twitter. Everyone loves Realty Income.
Yeah.
Coca-Cola, and then sort of beyond that, sounds like you only have like 5 or 6 more positions in other companies. So,
so
any more fan favorites like the Home Depots or the?
So another company I own is Tesla. I do invest in Tesla.
Okay.
I do not have Home Depot or Lowe's. I do like the companies. I just don't invest in them.
Right.
What else do I have?
McDonald's, Walmart,
no
Costco,
McDonald's.
Those are also fan favorites.
Yep, none of those. They are fan favorites, though. You're right.
Yeah. Well, for good reason, right? Like, there's always a line up at the drive-through. I'm gonna mention Starbucks here as well. Starbucks and McDonald's always line up the drive-through. There's always people there, pretty much 24/7. So how do you go wrong with those companies? They've been around for 50, 60, 70 years.
Right.
Home Depot, man, I can't tell you how much money I've spent at Home Depot and Lowe's, over the years doing renos. Also being, in a previous life, I was a contractor and subcontractor. So you can imagine how much money I've spent at home improvement stores. It's just like, absolutely insane. Absolutely insane.
Oh,
literally
sure.
Tens of thousands of, like, possibly even hundreds of thousands of dollars in my lifetime, right? Like, so.
I can imagine.
Yeah.
I do own one bank. It's actually a small regional bank that I picked up a couple months back when the whole banking scare was going on. It's Truist Financial Corporation, TFC, that reached down to I think $28. I picked it up around 29, and it's gone up since then. Has a pretty healthy dividend, and the finances look good. It actually missed earnings when it reported today, so it's kind of slid back down a little bit, but it hasn't concerned me over it. So that's another holding I have. I mentioned I love movies, so I have AMC.
Okay.
Which is
was that through the meme stock phase of buying AMC?
Yeah. So when I originally bought it, it was way back right before it shot up. I was buying it before I even knew it was a quote unquote meme stock. I just thought that it was a good price. I think it was around like $4 or so when I was picking it up, and I thought when theaters reopen, it's gonna go back up. So it was kind of a value investment for me. And then like it started shooting up, and I learned about the meme stock phase, I guess. So
Did you cash any out when it got like, because Reddit made it just go absolutely bonkers crazy, right? Like,
yeah. No, I definitely did. I'm not gonna say that I didn't. I did cash some out. I'm not gonna.
So I need to ask you another
have
question.
a
Are you
stock
the
10x
luckiest investor ever? Like the gold, the timing
Yeah.
of the COVID crash, and now you just happen to get AMC before it was a meme stock, and then I'm
Yeah.
gonna just sell at the top. Why not?
Yeah, that was another stroke of luck. I'm not gonna deny that
You
one.
are the luckiest
So,
investor ever. Wow.
well, maybe there is the law of averages, though, right? So maybe my luck is
Right.
gonna bomb on some other stocks in the future, and things will even out. Which I
hope
hope
not. I hope not. I hope not. I hope you keep that like lucky streak going. You need to invest
Yeah,
in
I
VICI
do.
properties, man. Like, do you know
Oh,
Vici?
sure. Yeah,
VICI, the
I
Las
have heard a
Vegas
lot about it.
Strip.
Yeah. Yep. I have a friend that invests pretty
With your
heavily in
luck, man,
that.
you got to get into this Vegas play.
Yeah. Oh, sure. Yeah, that's a good point. That is a good point. Yeah, I have a friend that tells me about it all the time. She's very heavily invested in that, and
Wow.
I've been taking a hard look at it too. But yeah, so I do try to invest very conservatively. I will say that. So I'm hoping I won't bomb on any future stocks or anything like that. And like I said, I stay away from penny stocks. I don't day trade or swing trade. If I buy something, I intend to hold it for years or decades.
Yeah. Wow. Awesome. I'm going to quickly bring up your Twitter profile here. So anyone that wants to find Alex, you can find him on Twitter at WiseAle2. Wise Ale. I love beer as much as the next guy. So let's talk about ale.
Yeah. So I'm actually not a huge drinker anymore. I'll be honest. My go-to drink is the old fashioned, which is why I went with Don Draper as my profile picture. Yep. Mad Men fan. But yeah, I like old fashions. I like doing different mixed drinks and different liquors. I'm not a big beer drinker though. I'll say that I'm not.
But you have ale right in your name, ale.
I do. It was kind of a play on words, I think, a little bit, because my name is Alex too.
Oh, I see.
And there was already a Wise Ale. I wish I could meet that one, so I had to add the two there. But
so yeah, definitely
go
give Alex a follow on Twitter. As you can tell by this conversation, it amazing conversation. So you can only imagine how good of a follow he is on Twitter. I definitely enjoy all of your tweets.
Well, thank you. Appreciate that.
Nice. So we're getting close to the 40-minute mark, and I'm trying to keep these around 40-45 minutes these days. Sometimes they get to 50. That's okay. Before we sign off, anything else you want to add? And this is kind of just the open-ended. Anything I missed? What else would you like to talk about?
I guess the only other thing I would want to add is I really want to stress the importance of reading and stress the importance of books. That's one of the main things that I got into with finances and just other areas of life is reading books, because I actually saw a tweet earlier today, which it sums it up completely, is when you read a book, you're trading 5 to 10 years of someone's knowledge for 5 to 10 hours of your life to read it, or 5 to 10 days, or however long it takes you to read. But you're gaining years and years of their knowledge and experience by doing that. And like, that's how you better yourself as a person, is you rely on the knowledge of others. So you don't make mistakes that they made, or avoid pitfalls that they did, or just gain nuggets of insight that they gleaned through maybe being in business or investing for 50 years. Now I have that at the very beginning of my investing career. So how much is that going to help me now more than it helped them in their life? So that's why I'm such a big proponent of books and reading. And not just nonfiction books either. I'm very into fiction too, because they do have their place, and it's fun to get
nice
into other worlds
too, right?
Yeah, I'm a fantasy book reader. So,
so you like to escape through both books and movies? That's great. Like,
yes.
honestly, that
yeah. Yeah,
There's a lot worse.
storytelling
There's a lot worse hobbies and pastimes out there than books and movies. So that's for damn sure, right?
Sure. Yep. I can agree with you there.
I do have to ask, since we're talking about books, have you read The Wealthy Barber?
I haven't read that one, actually.
So The Wealthy Barber is a little more Canadian centric. It was written by Mr. David Chilton. It was actually probably the very first investing book I ever read way back in the early 90s, like 1991 or 2. And so, like I said, it may be a little more Canadian centric, but it still has a very, anybody from any country in the world could learn from it.
Okay.
It was where I first learned the term pay yourself first.
Right. Yeah.
And that's just like obviously one of the most important things in investing is every 2 weeks when that paycheck comes in, make sure you take that 10%, whatever it is, and just put it aside into your investing account. So
Yep.
I would highly recommend The Wealthy Barber. I'm sure you'll have it read by midnight tonight.
I have written it down, so as soon as we get off here, I am going to pick it up.
And then shout out also to Dividend John at Johnny Boy. Is it 1835 on Twitter? He released a book last fall, Too Rich to Be Stressed. He's been here a guest on the Passive Income podcast, and he sent me that book to read before we had our conversation. And another great book.
Awesome. Yeah.
Again, a little more Canadian centric, but still great life lessons and life stories in that book. So. Basically, that's the first book I read and probably the last one I've read
Nice.
regarding investing, right? So
yeah. Well, now I got 2 to pick up. So
yeah, and I'm sure they would appreciate it. I'm sure they both have to be available on Amazon and Kindle, so they're probably readily available.
All right. Well, I will do my part and add a sale.
I'm sure they'd appreciate it. Okay, well, I guess we're getting close to a wrap. Yeah, I love your kind of final thoughts there of just saying, just read something, you're going to pick up someone else's 5 or more years of knowledge in 5 or 10 hours. So that's, I've never thought about it that way. That's incredible.
Yeah. Well, thanks for having me on. I really appreciate your time, and it was definitely fun. So
yeah, no, I appreciate your time as well. Thank you so much for coming on and spending time with me here on the Passive Income podcast. This has been one of the best conversations we've ever had. Like you can probably tell, I've enjoyed every second of this. We've had
me too.
A lot of laughs. So going back and forth has been so much fun. Yeah. With that said, you're still here. You're still watching. Well over 40 minutes later. You know the rules. Subscribe.